Hey guys, it's Dexter here from Tier 1 People. Just before we get into today's show, just want to give you a heads up on a new opportunity we're working on here at Tier 1 People. Are you ready to build something big? Join our client, one of the fastest growing consumer fintech apps in Asia, as their expansion lead in Australia. You'll launch the brand, recruit your team, and drive growth in one of the world's most exciting fintech markets. We're on the hunt for your typical unicorn candidate, a growth expert who makes shit happen and can handle a unique role where partnerships, digital marketing, growth ops, strategy, and recruitment all come into play. If you've taken a fintech business from 0 to 1 or 1 to 20 and want to be part of something big, reach out to me on LinkedIn or apply now at info@tier1people.com.
Welcome to Fintech Chatter, the show where I connect with fintech leaders for a bit of a chat. I'm your host, Dexter Cousins, and the founder of Tier 1 People, the executive search and recruitment firm that's dedicated to helping high-growth fintech ventures hire exceptional people. Today's guest is Ritchie Cotton, the co-founder of Valiant. Valiant celebrates 10 years this year, and I'm here to chat to Ritchie about the highs and lows that he and his co-founder, Alex Molloy, have experienced over this last decade. Ritchie, welcome to the show.
Thanks very much for having me.
Fantastic to finally be here.
Yeah.
Got to say, what a vibe.
Yeah.
It's
You like it?
great. Yeah, it's awesome.
Excellent.
It's awesome. We're going to talk about that a little bit later on because
Sure.
this is, I think, without doubt, certainly in the last 5 years, the best environment that I've walked into in terms of an office.
Amazing.
Yeah.
That means a lot.
Yeah.
I appreciate it. Thank you.
So we're going to cover some of your other secrets to success. But before we talk about that, maybe if you could give our listeners and viewers just a little bit of an insight into Valiant and the big problem that you solve.
Yeah, sure. So ultimately, it's interesting. We actually had one of our early investors the other day send us the initial PDF we'd sent them to apply for their accelerator way back in 2015. Now, we were kind of reading the articulation of our vision mission, and it really hasn't changed much, to be honest. And ultimately, that's all about how do we better connect a typically underserved market and small business with the right finance options for them at the right time on the right terms. I think small business are often lumped in the too hard basket from a financial services perspective. Underbanked, lending is difficult. You kind of have to give up the family home and other things. And I think also mix that with the fact it's an unregulated market from a credit code perspective. It just means you end up with some bad actors and people who prey on small business. And so I think our kind of vision was, how do we create the platform and mechanism to create the best connections between small business and the right funding solution, and then make that process really seamless. So as your business grows and evolves, those solutions grow with you. You're not having to go and hunt and find them yourself. And then when you do decide what you want to do, it's easy as clicking a button to make it happen, rather than, again, another 30-page application form. I've got 5 PDFs here. I've got this here. I've got this here. And sort of then helping leverage technology and process to facilitate that end-to-end process.
So you were kind of what I would class as one of the OGs of Australian fintech. You'll have seen, I guess, a number of businesses come and go. Tell me about some of the achievements that you've had in it over this last decade.
Sure. I think it's hard to distill down to one or a few, points. I think maybe I'll talk about a few things I'm particularly proud of.
Yeah.
I think one was the way we navigated the business through COVID. Obviously, small businesses were hurt and impacted very sort of hugely during that time, and the economy kind of stopped, and lending dried up in certain areas, and sort of I think the natural way our sort of businesses diversified across multiple funding types, working capital, asset finance, commercial development, etc., really helped with that in the portfolio and managing that. But I think ultimately our crowning achievement would be just the customers we've helped. We've just shy of helping 25,000 unique small businesses, just shy of funding $3 billion dollars for Aussie SMBs, and I think that's a
lot of jobs.
Yeah, a lot of jobs, a lot of GDP, a lot of, you can kind of approximate a few measures to it, but I think I'm really proud of that. I think ultimately, it's very easy to look at numbers on an aggregate level, but when I think of what goes into that $3 billion, for example, it's hopefully, and I believe it is, a whole bunch of people who just sleep easier at night. It unlocks opportunity for them. It takes an idea that's in their head and makes it a reality. I think that's probably, we aren't a successful business if our customers aren't successful.
Yeah.
So, I think the way we've been able to help them be successful is probably what I would hang my hat on.
Right. So I want to kind of do, if you don't mind today, kind of 3 parts of this show. I guess first is to talk about Valiant and that journey that you've been on. Second part is, I guess, kind of the culture and what you've built here and your approach to leadership. And then the third part is kind of, I guess, where you see fintech as a whole right now in Australia, what we can do to move forward. And then, also kind of what we can expect this next decade of Valiant.
Sure.
So let's kind of rewind all the way back to the beginning and the genesis of Valiant.
Yeah.
How did you and Alex meet?
We met at university, actually. Funny story, in my first year, Alex was actually one of my tutors for one of my courses.
Wow.
And I think I was probably that kid in class that when no one else put their hand up and there was an awkward silence, I said, "Oh, fine." And so we eventually, the next year I joined the same tutoring program, became a tutor. And so we ended up working together. And that's sort of when we started to hang out as a broader group. And
what were you studying?
So I'm by major studied quantitative economics, so econometrics and finance. And Alex was studying commerce and law. So it's sort of the introductory commerce and economic subjects that we were tutoring together. And then so basically from there, we were part of a contingent. We both went to university up in Brisbane, at University of Queensland, wonderful institution. And we're part of the big cohort that comes down every year from Brisbane to join investment banking, consulting, etc. here in Sydney or Melbourne. And we sort of, were part of a Brisbane contingent here that all hung out a lot. And then we effectively got to the point in our kind of the analyst tenures of what we were doing. So Alex joined McKinsey & Company as a consultant. I joined Credit Suisse in investment banking. I should caveat, though, I think that was a very deliberate decision to sort of learn as much as possible and really try to understand how the real world works.
And what year was this that you went to Credit Suisse?
January, February 2013, I think.
Wow.
And so
2 years, and then you...
Yeah, 2 and a bit. Yeah, we finished this sort of in consulting and investment banking. You kind of have the analyst program, if you will, where there's sort of a split where people decide to do an MBA or leave or do something else or stay and kind of really choose it as a career, I guess. And I think in our respective positions, Alex at McKinsey had gotten what they call fellowship, which is effectively where McKinsey will sponsor your MBA and you have a position when you get back, etc. And I think I'll very happily sing Alex's praises. He, got into Harvard, Stanford, and was working out what he wanted to do. And so he kind of had the world as his oyster. On my side, I kind of wrapped up the analyst program. I was really fortunate while at Credit Suisse. I think I worked with some really great people who gave me some great opportunities, like to, travel to the US on a few deals and work on some IPOs. And I kind of saw how that part of finance and the world and markets really worked, which part of the reason I study economics was because I think I find the psychology of that stuff fascinating, despite really, I think, and it was a uni where I taught myself to code and made a few apps, and it paid for coffee every day, but it was never that serious. But I think that's probably where I got bit by the bug of I want to be in technology, but before I start something or build anything, I need to know how it'll work.
So you're not a hands-on engineer and stuff.
I am. I still push PRs, and I genuinely love it. So I think I love it. The team probably don't love me doing that as much. But I like staying very close to the detail, and I enjoy the really minutiae of the problem solving that goes with sort of designing and architecting a really robust solution. So, but I think we kind of reached the end of those analyst programs. I sort of had an option to potentially move to the US in banking, and then we kind of I remember we were at brunch one day and kind of sat back and had a chat, and we're kind of like, well, we could go do that, or why don't we do something here and start our own thing and try that, because worst case scenario, we've got some pretty fantastic careers to fall back on. We were young enough where we didn't have a mortgage, kids, or anything, all the things we have now. And so it seemed like the right time. And so we basically drew on our experience from our respective positions as to where to direct that and we knew there was opportunity that we could move in. And Alex at McKinsey had done a host of, consulting for Big Four banks around technology strategy, and sort of, I think this was just pre-Royal Commission too, where everyone's kind of a bit nervous about how was insurance group treated, wealth management, etc., and where were they directing tech investment. And it seemed to be overwhelmingly in consumer finance. Neobanks were becoming a thing. The don't know if you remember them, but the sort of like the
peer-to-peer lenders,
those fast personal lenders like Nimble, and those that were kind of coming out. And I think it was very obvious that SMB and B2B as outside of corporate was sort of going to remain the sort of remain an underserved and an undercatered for market. And on the investment banking side, some of my colleagues in the US, as well as just in market, we saw the IPOs of Lending Club and On Deck and sort of in the US, and a lot of attention was starting to be devoted to fintech, and you kind of had the UK and out of New York mainly, a lot of big companies popping up. And that kind of trickled down here, where you started to see some of the local players start and prop up. So Prosper, Moolah, all those kind of companies started, and they were, raising funding from, really good sources, whether it be private equity or private credit, etc. And so we kind of, we knew there was a really strong opportunity in SMB. We knew that there was capital there that was seeking that type of return profile, as well as there being sort of a product gap in the market. We originally actually wanted to start a small business bank. But at the time,
everybody wanted to start.
Exactly. And we went through that whole series of emotions where, very quickly we realized we just didn't have the nous to pull off at that time.
It's not just that.
Things like the regulatory sandboxes weren't ready, and a whole host of other things. So
it takes decades to build a bank.
Exactly. And so we sort of very quickly realized that wasn't a good idea, and nor the best way we could have the most impact and help, because it was sort of, you then have to tackle payments, you then have to tackle merchant sort of facilities and transaction accounts, and so we basically said, okay, well, where else has there been this sort of massive transformation that was underpinned by some sort of a technology that allowed that changed the market ultimately? And basically the kind of roadmap that we saw was really relevant was what happened to residential mortgages in the kind of mid 90s to late 90s, where you had the Aussie home loans wizards, etc., kind of the advent of warehousing structures effectively introduced a massive swath of competition into the market and sort of bid down rates, as well as just open up to customers. There are just more options, and there's people who can help you with this. And so we sort of looked at that and said, well, okay, well, if that's sort of the model of the mid 90s was a bricks and mortar franchise style, we said, okay, well, if you built that today, what would that look like? And it would be technology driven. It would be probably centralized. You'd have kind of end-to-end workflows. You'd have a human touch, because this stuff is serious and impacts people's livelihoods. You want to give people that comfort, but also have a pilot in the plane, if you will. And I think and so we sort of that's sort of the when we put the pen to paper what we're going to build, that was sort of it. How are we going to best connect SMBs to the right funding and capital sources, leveraging technology, the best combination of technology and people possible to make that happen.
And so you're not a lender yourself. You've kind of focused very much
we're very much a
tech side of
platform marketplace. And the way I'd actually describe us, our business has sort of evolved quite a bit. So as you can imagine, small businesses have every type of finance need possible, working capital, asset finance, whether it be a massive truck or small assets like computers or office equipment, through to commercial and development finance. I'm building a 20-story apartment block, or I'm renovating a two-house dwelling as a developer, for example. And as a result of that, we've worked with every type of lender, with every type of process, with every type of customer. And over the years, we've had to build a lot of technology to make that process seamless, because, customers are funded through everything from small family offices through to big four banks, and everything in between, fintech funders, etc. And so what we've actually found is that now that we're 10 years in, the kind of technology we've built, maybe the last 2-3 years, we've had a lot of people reach out to us and say, hey, that tech you've got powering your marketplace, can you help me power a finance solution for my customers? Because when it comes to the nuance of credit policy, managing multiple submission routes, and sort of the complexities of the process and the data requirements and the facilitation, we don't feel equipped. It's not a core competency of ours, so we shouldn't build it internally. And so what we've actually had is a bunch of people outreach and say, hey, can we leverage your technology? So the last 2-3 years, we've really spent a lot of time productizing that technology. And the way I'd position the business now, and I think it somewhat touches a bit on the direction of where we're going, is our expertise and special sauce, if you will, is kind of at that top of funnel experience layer for a customer. So when I'm wanting to just see my options, get a quote, but then also through to how do I get an application to a lender and get that feedback going in that process.
Fill in all these details and like you get calls for the next
risk analysis, and sort of we're firm believers that a quick no is often better than a slow yes in SMB land, because it just creates stress and anxiety.
Well, I think that's in every aspect of business, right?
I think so. I agree. And so the sort of technology we build, the way I describe it now, and sort of the direction we're heading, particularly from a tech perspective, is we're really an experience and orchestration infrastructure platform for finance, for B2B finance. And I think that the part that we find particularly exciting as sort of AI becomes more embedded in our daily lives, and just where technology is going, is in an embedded context, like embedded lending context. So as a manufacturer or a reseller or a distributor, how can I embed finance at every part of kind of my sales motion, so I can increase basket size? I can help customers get the most cost-effective way to ensure they're on a regular update life cycle. Technology is moving so quickly now. If we look at, I'm just looking at someone's hardware there. If you look at what MacBooks are today with Apple Silicon versus 3, 4, 5 years ago, it's a different beast. And so how do you give people that certainty around budgeting and all those kind of things in that kind of context? And so that kind of embedded finance experience and orchestration platform we describe as infrastructure, because we're really helping other people power those programs. And it's all coming from the thing that is, and the technology platform that is powering our own core marketplace with 85 different lenders, almost thousands of different kind of products, and millions of different permutations of product policy. And that is becoming quite a powerful proposition. So we're focusing a lot of effort.
As I mentioned to you, like, one of the kind of things that I love about this podcast is how people like yourself are so generous in sharing their experiences and insights that it actually inspires the next generation or the current generation to do things differently. And what I'm really interested in is, we kind of talked there about the genesis and then this kind of leap to where you are now. And I'm curious as to whether where you are now, was that always the vision? Or if we go back to that kind of 10 years ago and you're kind of building out an app, like how have you got to this point now? And was it like a big, bold vision, or was it like, oh, look, we just start with something and let's get it out there?
I think we always had the vision that we want to, and it was part of the reason why we picked the name Valiant. We wanted to very much, in picking the name, we wanted to pick a name that we had to earn.
Right.
I think one funny thing with the name Valiant is, someone, in most historical contexts anyway, someone's only described as having fought valiantly if they've kind of died in combat or something has gone a bit wrong. And I think that idea,
you're not keeping to the script, Ritchie. Come on.
But that idea of from a connecting you with the right solution, we'll go to the end of the earth, that's been a consistent theme since we started. That idea of we will be the platform that facilitates and have the people that help facilitate that idea, and we'll turn over every rock, and we'll go through and we'll fight valiantly and be in your corner. And I think that always part of the name kind of resonated with us. So I'd say the core vision hasn't really shifted much. The way we've executed definitely has. I think
Right.
when we first started, just because it was the sort of path of least resistance for us, we very much started in the unsecured working capital space, where you just can be a little more digital and a little more, your competition sort of landscape is much more digitally focused. At that time in 2015 too, it was things like AdWords in fintech, kind of those acquisition channels weren't as mature, so there was a bit of opportunity in there. And so but then we found that as we kind of evolved into asset finance and other spaces, it having a more personalized and in a lot of cases, a human concierge experience was really important, empowered by great tech to make that smooth and fast and easy. Particularly as our customer base sort of broadened, everyone from buying an experienced 20-year veteran business owner looking to upgrade their fleet of vehicles, wants to talk to someone and understand and know, okay, you know what I need and you're going to help me. And kind of catering to every different sort of customer journey possible. And so I think the way we've delivered the model has evolved, but ultimately, very quickly we realized it was going to be this beautiful combo of tech and people. And then how that's, I think, probably the biggest change in how we've delivered things to date is really just this kind of more embedded finance opportunity, embedded lending opportunity that we're sort of looking at pursuing now on the tech side.
And were you able to get the business and a product out without raising much capital, or was it kind of quite capital intensive to do that?
Yeah, I would say we've definitely raised a fair chunk of capital now. It was sort of a Series C company. And I think, it's funny, I would say that's a lot of money, but then our core business, our core kind of marketplace platform business is now profitable. Or near profitable. And so when I look at, if you spread that capital over a 10-year period, it probably doesn't feel like as huge an amount, but I think relative to some other companies. But I think it's really guided, how do we attract the best people, and acquire in the best channels, through a period like COVID, etc. Like, how do we weather the storm and come through the other side? And capital is a huge part of being able to do that and make sure people still have jobs and roles. And we have a duty to our team. They rely on us to help them, sort of live their lives and their livelihood. And so that's really important to us too. And so I think capital was all part of that story.
Okay. I'm going to talk about the team and culture in a little bit, but I kind of want to just dig a little deeper into kind of that journey that you've been on. What was the moment that you thought, we've kind of cracked this, we're on to something?
I think there's probably a few different moments where I felt the emotion different ways. One is, I think, when we kind of secured our seed round, it was sort of this is no longer like a thing that we're toying with, or an idea.
It was a pretty uncommon thing to go and ask strangers for money in Australia.
It was just starting, and we were kind of entering a time when for example, it was like Ben and Toby Heap had just kicked off AWI, and then they were just I think at that time they were just about to roll it into H2 from memory, and you kind of all the accelerators were just starting. I think our kind of lead investors in two early round investors, Reinventure and Carthona, had only just really started investing in.
They would have just had Society One, I think.
And a few others, but we were in the first fund for them, for Reinventure, and it was still very early days, and so I think it was. I think that point we were kind of part of a very select few that were able to raise like that, and I think that's for a moment where we're like, okay, now we have an obligation to make this work. Let's go. There's someone and a group of people who really know what they're talking about and see the whole market, and they're kind of telling us they believe in us, and so carries a huge amount of weight, and it's not a responsibility that Alex or I take lightly. So I think the seed raising was a big one. I think coming out of COVID was the other big one. The fact that we could survive that and came out the other side just more resilient than ever. Really kind of said, okay, if we can survive that, we can survive most things. And so I think that phase of things allowed us to really knuckle down, get, I guess, battle fit, if you will. And then coming out the other side, that was okay. Well, we're going to be good. We're going to be okay. We have a plan and we have a roadmap. Up until that point, we'd grown exceptionally quickly, and I think with the benefit of hindsight, it's very easy to say, but potentially too quickly. In that you obviously, and which I think is every founder story.
Like everybody was pushed, right?
Yeah,
like it was growth at all costs.
Yeah,
and then very quickly became cut costs at all costs.
Yeah, exactly. And so it ended up you kind of have that whipsaw, and you kind of land in the middle somewhere. And I think we land in a really healthy place. I think full credit to Alex, who, while I was busy trying to maneuver the technology to help us streamline and all that operationally, he really shepherded the business incredibly through that period. So I think coming out of COVID was a really that was another moment. And I think the latest moment where I've kind of gone, wow, we're almost kind of starting a new business, if you will, but built on the foundation of everything. We couldn't have done it without the 8 to 10 years prior. Was we had our first sort of partner in the embedded finance, embedded lending space say, hey, we launched a pilot with them here in Australia, and they said, hey, this is actually really great. We'd love you to come to the US.
Can you say that again? Nobody ever says that about partnerships.
Yeah, I think we've got a wonderful partner in them, and I think we've worked very closely with them. And the pilot here worked really well, and they kind of said, hey, how do you feel about coming to the US? And I sort of said, let me book my ticket. And so I think we're now that kind of embedded lending solution is now live in the US with them and a few others. And so I think it's super exciting, because I think that's sort of another moment where you go, wow, like not only is what we built and what we have within the core business incredible, it's also there are other people that want to leverage it, and it's a way that we can have more impact on more businesses and help more people, and sort of it all aligns with the same vision and mission that we set out originally. It's just a different delivery model, I guess.
Yeah. I want to talk about the culture that you've built here. So as I mentioned, I'll probably take some video actually just of the the environment so people can see what I'm talking about. But I don't think it's going to capture kind of the vibe of the place, which if I were to describe it, and I'm showing my age here, but what it really reminds me of is a kind of a time that I've not seen since probably the mid to late 90s, where I was actually working in design agencies, and because of technology, like a lot of us could work from home, and you'd come into the office and there was just like a vibe. Kind of didn't want to leave. We'd have music on, mainly kind of dance music and techno and stuff. Right? Yeah. But there was this focus, but also at the same time, this kind of real energy. It was completely opposite. I think what we'd kind of developed, throughout the kind of 2010, 2020s of people just faffing about on beanbags and whiteboards and drinking kombucha, and it was like that was cool. It was just, to me, I was like, I just can't think of anything more like mind numbing. Like this. So how have you created this energy that you've got within the business, whilst also having what you can very, very clearly sense as a focus and kind of commitment to doing the work?
I think it probably boils down to a few things, and I'll kind of start at the top and work down, because obviously every layer of the organization is responsible for the culture, or sorry, maybe not responsible, but contributes heavily to the culture. I think from the beginning, Alex and I have been always very consistent with our values and what we deem as important. We have a defined set of company values that have been the same for, I think, 7-8 years now.
Is there much difference between the kind of values that you had around the Valiant name and what it meant for customers and what it meant for the business? Is that kind of then flows through to your people as well? Or?
Yeah, definitely. And for example, our values are, number one, customer champions. So everything we do, product, sales, customer facing, it's all about how do we champion the customer? Yeah. The way we build a sustainable long-term business is by getting them the best outcomes. So our second value and excuse the language, is get shit done.
Yeah.
And I think that's a, kind of just general productivity, but also focus and kind of that relentless pursuit of moving forward. Sort of if something if you think it can be made better, make it happen. If you think, sort of, if a customer needs something, make it happen, and sort of just really drive that. Which I think it's also sort of captures a little bit of the idea of do more with less, and of the more, so those kind of principles. And then our third value is, because our logo is sort of two lions, sort of the cub and the larger lion, and the lion's been a common motif across the history of the business, is and we call the team the pride as a result, is thrive in the pride. So how do we support and help each other? How do we, build not only relationships with each other, but like systems and processes to facilitate that, management structures that make that happen. And I think a big part of the culture now is how we've iterated the way we've then help the team thrive together over time. So I think our three values kind of really capture a lot about how from a top down, I think Alex and I have been kind of relentless in our repetition of them, to the point where people kind of probably go, we know, but I think you just sort of have to be consistency there. We haven't really wavered from that. And then I think the other part is just really iterating our hiring process. Yeah, it's funny, at the start of the business, Alex and I did a founders coffee with every new person who joined. It got to the point where we were doing like 2 or 3 a day, and we got none of our own work done, so we had to kind of make that a bit more scalable. But then distilling those things into, for example, we do what we call a cultural interview, which has nothing to do with competency or ability to do the job. It's just sort of like, do you when we chat with you, what's the vibe? And I think a big thing that a lot of people companies talk about cultural fit. I'm not a huge, obviously cultural fit's good. I'm not a huge fan of cultural fit compared to cultural ad. And that that when someone's not in the office, you notice they're not there. Or that idea of the personalities and the human things that make a company really special.
I think it should be value fit, not culture fit.
Yes. Yeah, exactly. And I think, and then you're really solid for cultural ad, because what are they bringing that's really making it richer and a more wonderful place, I think.
And I think one of the reasons why so many businesses get into trouble going down the culture fit is they haven't really figured out what the values are.
Yeah, possibly.
They're kind of,
right.
and they're kind of aspirational values, not like this is actually how we, code of conduct.
Yeah. And I think that's another part where we, sort of as a part of our kind of evolution and just maturing, the way we sort of, the professionalism, performance management, all these kind of factors that have evolved over time. We've ended up in a position where we have really phenomenal leadership. Our kind of Alex and I, our kind of leadership team now is incredible. They're all very motivated and on board, and are true reflections of the values. And then you can see the way that distills down into teams. And I think we sort of have spent a lot of time optimizing how leadership works, how sort of the recruitment process sort of and how everyone's role in that, to a point where I think you might interview for Valiant and self-opt out because the process has shown you that maybe it's not a good fit. And that's totally fine. I will never hold that against anyone. If it doesn't fit for you, it doesn't fit you. That's fine. But ultimately, hopefully we attract a particular type of talent that highly motivated, wants to achieve. And I think on the engineering side, product and engineering design, etc., I really look for just three main things. I call them the 3 I's. I don't know where I got this from. I'm sure I got this from somewhere. I don't think. It's definitely probably not mine. Intelligence, just kind of raw intellect. Can you piece the puzzle together? Intuition. Can you read between the lines and understand? Okay, well, let's connect the dots and think in an abstract way and make sense of what is otherwise a heavily regulated kind of complex space. And then lastly is initiative. So if you've got the intellect and you've got the spidey senses tingling, you kind of do something about it and you make it happen.
Yeah.
And I think if you have those three things combined, you're really an unstoppable force if given the right resources, tools, and structure to work within. And so that's sort of particularly, we have
but I've got exactly the same thing, but it's a completely different way of saying it, which is
I think everyone trying
propensity to learn, critical thinking, and
exactly.
care factor,
exactly.
Like it's accountability.
Exactly.
But it's
you can draw lines.
You can draw to all of it. But look, I agree. I think it is, and it oftentimes, kind of recruitment is made. It's never going to be easy, but it is a simple process, and I think it's made a lot harder when you kind of do the you do things that are counterintuitive to it. And what certainly what we've brought into our process is we've just tried to bring that intuition back to say, hey, how do you operate day to day, right? Like, what's your modus operandi? It's first principles thinking, design thinking, right? And we're just going to apply those things to the hiring process.
Yeah. And I think also include people in that process and those exact kind of principles. Because I think the cultural interview I was mentioning, that part is you're actually either meeting people who aren't in your team from a totally different part of the business, or people who are in your team. And that way, if everything goes well and you rock up on day one, there's a bunch of people who they're like, they chose you.
Yeah.
And they, knew you were coming and are looking forward to you joining. And you're not joining kind of a, hey, everyone, I'm here now. You're kind of going, hey, and you sort of, there's a level of familiarity and kind of let's hit the ground running because we all know where we're at.
Yeah.
They know what sports you like. They know, because you talked about those things when you were just sort of hanging out.
Yeah. And look, I've used this analogy loads where if you look at your partner in life, you didn't kind of meet them on a blind date with a clipboard of questions and interrogate them and then say, hey, can I have, numbers are 2 X's and tell me how much you earn. If I'm interested, I'll call you back and I'll bring a friend along. We'll ask the same questions. And then if that goes well, you can move in with me. You go, what? But that's kind of what a kind of traditional, or a lot of processes that people are running are doing, right? And for me, it's about, as you pointed out, relationships. And how do you get those relationships, right? Well,
and that's part of, I think, what we miss most about when everything kind of went fully remote for that period.
Yeah.
You just miss those micro interactions that are really human. Symbiosis of knowledge sharing and other things, I think, is really important. And we've got to the point, particularly now, the customer facing roles we have, people want to come to the office.
Yeah.
The majority of them are in 3, 4, 5 days a week.
People don't want to believe this when I say it to them, but pride that we're called tier 1 people because that's what we go and find, right? Like that's where we operate, and they want to be in the office. Right? They want to be around people. Because
they want to build something.
That thing around thing around those 3 eyes that you talked about. They know that they only get better by being around better people.
Yeah, and I think you can. We've also just found as the business evolves, high performing people attract high performing people, and then you kind of get a level of momentum with that in a team. And I think a huge amount of credit. The largest parts of the business are sort of the customer facing. I guess you'd call it sales or credit roles, and our heads of those functions, Luke, Henry, done an incredible job of the recruiting sort of efforts there. Felix as well, our COO, incredible effort. Josh, our sort of head of talent and people, incredible effort.
Yeah.
So I think we just have a really great set of leadership who are really aligned around what we are, what we want the business to look like, and how we want to be. And everyone's kind of rallied behind that, which is amazing.
So I want to kind of move on to I guess the current state of fintech in Australia. Yeah. So obviously you've got a lot of experience in the space. You've seen the evolution of it. What's your kind of sense as to where we're at now?
Yeah, I think it's interesting because I guess depending on the part of fintech you pick, I think if you look at lending specifically, the rate environment, looks like it will become a little better. Sort of the general sentiment is it's going to become better, and so I think a lot of those, maybe alternative funders that may have felt a real crunch if rates had gone up more or something, probably feeling a little better. But I think consumers have been pretty resilient through the uncertainty as well, and so lending's still happening. And I think what we're seeing now is just a lot of generally how can people leverage AI and those kind of the newer technologies, and how does it fit in a world that is somewhat very rules based and needs to be deterministic because of the cost if it isn't, and understanding across a portfolio what performance looks like and things like that. I think I think a general theme across all verticals, payments, lending, etc., is just the idea of embedded. How do you get solutions, and embed them right at the point of need, and then connect people to the right thing at the right time, and whether that be to tailor to a certain customer preference or to just offer something that wasn't possible before.
Yeah,
I think that's really really important. So I have chat with other founders all the time, and embedded insurance, massive opportunities. I think payments was already a fairly embedded kind of piece, but the way that you leverage the data and insights out of that and kind of tap in, like that's probably still a little bit removed from where it could be. And I think so. I see the concept of embedded as a really core. I think what you'll start to find is once those services begin to embed. I know, for example, like Stripe is doing a heap of stablecoin work, and I think once it becomes the one button click because they're really helping facilitate that, I think that's when you see some more widespread adoption. I think crypto has been somewhat associated with speculation risk and sort of markets outside of sort of I mean that's not entirely true, but I think for it to really sort of be adopted en masse, you kind of need to give that. And I think the branding of stablecoin is great, because that's probably the part that if you were talking to someone who was on the fence about it, well, I don't want to go into something that I perceive as risky because of the market commentary or the to the moon, what does that mean? That sort of thing. And so that idea of like, hey, here's like just effectively a digital representation of a US dollar. Oh, I know what a US dollar is and I respect the dollar. So and so I think there's definitely interesting thing. So I think like Stripe, and you mentioned Revolut Wise, I think like Adyen, like as these companies start to implement crypto in their stack of available options, and you kind of the idea of having a digital wallet, I do wonder if I often think about central bank digital currency things, because that's obviously a huge move if something like that happens, and then where you kind of go with that, how that impacts things like welfare systems and things like that, because and we could talk for a whole hour on that. There's I think that's when crypto will have its really shining moment around. It's now relevant for everyone, and I think someone put it to me a while back. It's sort of like a financial technology is truly relevant and remains relevant if someone's salary is paid in it. So that's why in the US checks are still a thing. Here, not really a thing because it's all EFT and whichever. But you kind of go, when you're trying to like create a system to replace something, here you'd be like, okay, we're replacing EFT or some mechanism of electronic trying to transfer. Over there you go, well, there's someone who just really loves the feeling of receiving that piece of paper because that's what's happened for X many years, and I think that's something that's kind of hard to navigate. Essentially.
In terms of, I guess, where Valiant's going, what can we expect in the next decade?
I think this idea of embedded is massive for us. We're really building out our technology and product team capability to effectively take it global. We're in Australia, the US now. Would love to, over the course of 2026, 2027, be across the UK, Europe, potentially parts of Asia, because we've definitely found we have a lot of market pull in a lot of places. And I think it's continuing to build out the product suite, continuing to really focus on how do we help other people who have SMB customers embed a finance process in the right way that doesn't hijack their sales motion, doesn't create noise in an otherwise in most cases quite nice process that they've developed over time and process they own. I think one thing from a technology perspective, we never want to be the type of company that comes in and says, oh well, this is now the way you need to do it. We work with you to work out how we can add the most value,
Yeah.
and not hijack process, because I think that doesn't really help anyone.
Yeah.
And I think we also never will, we'll never go to a lender, for example, and say, we know how to lend better than you. You've been doing it. In some cases, some lenders are, you've been doing it hundreds of
Yeah.
years. So how can we tell you anything? It's more a case of, here, we understand your problems. We know why you do things the way you do, and how can we work with you? And so things like how we bring some of the risk and fraud assessment factors further up the funnel, help you understand understand more about a customer, KYC earlier. How do we embed options in the right way, the right time, run that pre-screening or pre-scoring that's needed so that when an application does hit their system, they know it's effectively 100% approval. And so
for me, I think the biggest mistake they made with CDR was, I think you should have started with small business as their test case.
Yeah.
I just think it's far, more, because I think there's a lot more friction there.
Definitely. And I think also the reason that friction exists is because it's, when you look at the way a financial institution thinks about a business, is often it's very separate to the personal life that runs the business, or is behind the business. But then the practical reality is the two are so interlinked and meshed. I think it's very hard to delineate, particularly if you're looking at a sole proprietor or a sole trader or partnerships. Their business is
just simple things, right? Like me buying a car, right?
Yeah.
And doing it through the company and having my mortgage and my business accounts and everything all with the same bank.
Yeah.
And an experience that takes weeks. You eventually just lose patience and go to the car dealer and I go, yeah, we'll do you a deal. Yeah. 30 minutes later.
Yeah. And
often driving as a cheese.
And often that might not be the best deal, and it's how do you make sense of that madness and kind of go, well, the people who, how do we help the people who are on your side already continue to help you? And I think, but then also open up, if you're, I think finance can create relationships with brands in a way, that idea of like, wow, I've got a really beautiful way for me to, I kind of gave the MacBook example earlier, like, my business runs on Apple, for example, and I know that every 2 years I'm going to have the latest and greatest. And I look forward to that moment. And so I think you can kind of create some loyalty in a brand relationship.
I think ultimately, kind of, if I look at my two experiences as a retail customer and a business customer of the same bank, one, I feel it's banking at my convenience, and the other one, I feel like I'm banking at their convenience. And that would be on the business side. And I think it's, that there are a lot of kind of problems where they've thrown a lot of money at technology and everything else, and the problems still persist. And I think ultimately it comes down to a cold, calculated view of what makes us most money. And in Australia, it's like mortgages. So I think, if you're tossing up between lending against a house in Rose Bay or a new oven for a baker, I think from a bank, it would be. So it's actually incredible that we're talking about 10 years of Valiant, and I'm kind of 9 years into my business. And I don't think I've seen any change at all in my business banking experience. I've seen a lot in my
consumer experience.
Consumer experience,
and I think
so there's a massive opportunity.
I think that's a real change. Right? I think technology's come a long way. Just with everything happening in AI, just technology in the last 6 months.
Say that. But this is the thing, right? Like, here we are 10 years later, still talking about the problem that you'd identified, and the banks are nowhere near further on solving it.
Yeah, I think it's interesting. I think in some ways they are further on, because a lot of them have invested in sort of core banking upgrades and a few other bits and pieces, but ultimately
it's the kind of customer experience, right?
Yeah.
It's like, and I think this is what I've noticed over the last 15 years or so in Australia, from incumbents, not just in banking, but insurance. When they talk about innovation and they champion it, it's all internal back-end stuff that the customer never sees. It's the customer looks at still the same insurance policy I could have got 50 years ago.
Yeah.
Still getting hit with, an increase every year. It's still, claims is still I might be able to do it through a phone.
It is funny. I think I remember way back kind of early fintech days, and everyone's sort of talking about the unbundling of a bank, and they were using that.
Yeah.
You had that big chart with all the areas of bank and all the fintechs that were kind of tackling each of the areas, and we kind of always had the hypothesis that people would do parts of what a bank does better, but the core fundamental value prop of a bank of fractional banking, cheap cost of capital, it's such a competitive advantage, it's very hard to shake. And obviously banking has a natural stickiness to it, particularly once you're established. And so I think that stickiness is probably what has created some of the inertia in the experiences. And I think they maybe also took that view, hey, we're not going to be unbundled. And then the parts that they were happy to be unbundled, they've let happen. And I think that's where we've always seen banks, funding partners as sort of, we call them funding partners, so partners, where we're helping kind of meet that bridge of, our focus is a core banking platform upgrade. Okay, well, we'll look after the experience layer.
Yeah.
And how do we connect those dots?
Yeah.
And make that work for everyone, including the customer.
Awesome. Ritchie, we get some amazing talent tuning in. If anybody's interested in joining what is, I can guarantee you folks, one of the best kind of vibes I've seen anywhere at any fintech in Australia, where can they find out more about careers?
Just head to our website. valiantfinance.com, or you can send people@valiant.finance an email. Or I think maybe we can include some notes in the episode description or something. With
we'll stick links.
Yeah, and I reach out to Josh as well. I think our head of people, he'd love to hear from everyone.
Brilliant, Ritchie. It's been great to chat to you. Congrats on the first decade. Really excited to see what you do in the next decade as well. I'll probably not. Let's do something a little bit sooner than 10 years.
That sounds good. Sounds great.
As always, folks, thanks so much for tuning in. If you are new to the show, then make sure to follow us on Podcast Player, or give us a subscribe and leave a comment if you're watching on YouTube. If you're coming back, thank you so much for your support. It really does mean a lot to me, but more importantly, it really helps us elevate great Aussie founders like Ritchie and great Aussie fintechs like Valiant. Until the next episode, keep well,